Hello, it is Nick Fox from Ingham Fox. This is a short market update for houses above £750,000 in Farnham, Alton and Alresford and the surrounding villages. We're recording this in January 2026. The latest Rightmove Asking Price Index has just been released and it's one of the most striking for a long time. I look forward to taking you through it. According to the latest figures, national asking prices rose by 2.8% in January. This is the largest January increase on record and the strongest monthly rise since 2015. Now that sounds dramatic, and of course it is, but it didn't come out of nowhere. It follows several quiet months towards the end of last year, especially caused by the budget, fear of what may happen, and many buyers and sellers hit the pause button, especially in the sort of £750,000 plus level, as they were concerned what may happen. So, of course, when confidence wobbles, we see the market pauses. But now it's January and it's after the budget, we're seeing the market start to unpause. This return in activity isn't random. It's being driven by the bottom of the market, which is good news. First-time buyers are back. They've benefited from some salary growth over the last few years. House prices have either been declining or at least are level, and that's given them increased affordability, especially as interest rates start to decline. And also the cost of rents, of course, gone up, so it's making more sense to buy. Now, this is important because obviously they start the chains. The English housing market is reliant on chains, and if we aren't buyers all the way through, it struggles. So mortgage affordability is a key part of why confidence is improving. And let's be specific on rates. So the average 2-year fixed mortgage rate is now around 4.3%. And the best rates for stronger deposits are around the mid-3 range. Now, this was reflecting the market were expecting inflation to be falling down and there to be at least 2 more interest rate reductions by the Bank of England quite quickly this year. Now, yesterday, the inflation figures came out and they were a bit higher than expected, which was a disappointment. Now, hopefully that's a blip and won't affect things too much. But generally, I think we can expect confidence and affordability to be improving. So looking at the figures, for a £500,000 mortgage over 25 years, it was at £2,900 per month. Today, with the reduced interest rates, is around £2,700. And for those best 3.5% interest rates we spoke about, it's around £2,500 a month, which is a £400 a month saving. Now, obviously, that helps affordability, but crucially, it also helps the sort of sense of feeling and optimism. Now, going back to the Rightmove report, there's a lot of interesting data on London, and it's worth looking at this because what goes on in London tends to reflect what goes on later in our area. And what we saw was London asking prices rose a spectacular 2.8% month on month. But again, we need to look at the detail on this because the year-on-year growth was actually 0.9%. And London had been in decline for a few years, which we've been feeling in the southeast. Now, looking at the London boroughs, though, it does paint an interesting picture because it is the first-time buyer that we spoke about earlier that's been driving up the values in the lower value boroughs. The mid-value boroughs have been the best level, slight declines, so places like Wandsworth, Putney. And then the super prime boroughs, so places like Mayfair and Chelsea, are still really struggling. And actually, so prices are arguably down to 2013 levels as overseas buyers have been scared off by the overseas buyers stamp duty premium and also the higher stamp duty premium that we've all had to pay and some non-dom status. So it definitely goes back to what I was saying earlier, that this market recovery has been driven from the bottom rather than previous market recoveries, which were driven from the top. So looking at what happened in the southeast, house prices rose 1.7% in January, which is very encouraging. Obviously, that's compared to the 2.8% we've just discussed in London. Although this is the important thing, they do remain 1.6% lower than a year ago in the southeast. So we're seeing a familiar pattern of London sort of moving first and southeast slowly following. There's some other important things that came out of the Rightmove data that are also worth considering. The most important one is definitely there is a lot of houses available for potential buyers to choose from. And of course, this keeps house prices soft. And indeed, we're at the highest levels nationally since 2014 for people to choose houses to buy. And we're definitely seeing this in our area as well. The market was a bit quieter in the autumn. Some houses were withdrawn from the market, but a lot of those have already come back. And we can certainly expect more houses to be listing in the spring, which of course is going to keep house price growth in check. And indeed, up to a third of existing homes on Rightmove have had a house price reduction. So what does this mean for us locally in Farnham to Alresford and the surrounding villages? It means the market feels sort of calmer, more balanced and quietly active. So what does that mean? It means that people can have 2, 3 or even 4 viewings at a house. There is often quite extensive negotiation. So it's a calm, considered decision, but good homes, which are well presented and sensibly priced, are still finding their buyers. So if you're starting to think about a move this year, the best first step is often just to give a call and let's have a chat. Sometimes it can lead to a plan, and sometimes it can lead to a masterful plan of stay put for a while. Anyway, whatever way it is, I'm very happy to help. Thank you for listening, and I look forward to being back next month with another update.